the state of affairs. Where do we stand with our portfolio? We're into the second half of the year. The portfolio is down 12% for the year. The market's up 12%, but underperforming by 24%. Our largest positions are Tesla and Nvidia. We also have some other positions that we're not going to talk about today. So let's start with Tesla. There's three big factors which have helped recover the stock recently. I'm going to talk about them and then generally talk about how we feel about the company. And then with Nvidia, we have the upcoming earnings call. And I think there's one big driving factor or one big thesis here. We're going to talk about that. So let's start with Tesla. The three factors are, number one, we have better demand for the cars driven by probably gas prices and FSD. So higher gas prices around the world because of the Iran war just mean that electric cars are more interesting. And then we have also the self-driving that is, at this point, at least the supervised self-driving is solved. That means that you absolutely have no interventions at all. I mean, you can put the car in gear. Not gear, but you sit in the car. You might have to get out of your parking spot. You might have to turn around some difficult exit or something. You put your address, and then that's it. That's all you have to do. And I think that is a big convenience factor. So this convenience factor is starting to kick in. The self-parking is 80%. It's not full there, but it's 80%. And I think a lot of people, I barely park anymore by myself. And if I have to, it's really difficult. So, but I think this function, so I'm talking about supervised FSD here. So this is not unsupervised. You can't check your phone. You can't sleep. You can't send the car to pick up your wife. None of that stuff. Simply, you're sitting in the car as if you were driving, but you're not driving. And I think it makes a big difference. And the car's that good. Actually, it's better than me in many cases. I feel a lot safer now with the car driving itself. And very importantly, I just saw, just as an anecdote, I saw a video about people talking about the trucking, and they mentioned the range anxiety. Now, the person in the video didn't talk about the trucking range anxiety. That's a different story about his Tesla sort of having issues with range and stuff. And I mean, that's a red herring at this point. This is, if you have issues with range in your Tesla, you're not utilizing your car properly, or you're just spreading FUD. Because there is no such thing anymore. You put the address, the car computes everything. It just drives to the wherever it needs to charge. You have to get out of the car and charge. It can't charge itself. But there's no more range anxiety here. The car does the math. And unless you live in Alaska, somewhere in Fairbanks, and even there probably it's solved. But I'm saying, like in most places where Tesla is sold, this is just not a problem anymore. I think it's different in Europe, partly because the market there for charging is complicated and monopolized and difficult and headache and probably on purpose being made difficult. And God knows what's going on there. But here in the US, the range anxiety is a red herring. It just should not exist. So anyway, long story short, the demand is picking up. We just bought a new car. We had a 3-week wait, which is, it's not huge, but still there's a wait. I mean, that means there's the factory should be working at full scale if I have to wait for my car. So that's the first factor. The second factor is the announcement of Cybercab. The whole Cybercab story in Tesla is the main driver of the stock. This is the future of the company. I think we're all waiting for this. The idea of transport as a service, massive cash flow generation, because transport is very expensive. So if you have a vehicle that is fully unsupervised and brings you down to maybe 50 cents, maybe even lower, 20 cents per mile, versus $1.50 to $2 per mile. So you have a 10x improvement in cost per mile. That should translate into massive demand and massive cash flows. There's been delays with this. We've moved our model out because of that. In other words, we've just modeled our cash flows further out, which has lowered our valuation, the valuation of the stock is sort of in the 550 to 600 range, fully valued. We've used that for the merger calculation, which we'll talk about as the next factor. But this announcement is important. It's a milestone, and the earlier we get Cybercab on the roads, the more we can learn, the more we can iterate. Tesla is an iteration company. It might not all work from day one, but it will work, and it's going to disrupt the market. The third is the merger with SpaceX. I think right now, the way we see it, we see fair value at 55, 45, 55%, SpaceX 45%, Tesla. We think that at current prices, the upside in the stock on the merger announcement is very limited. You might get maybe 10, 15% move in the stock because Tesla would be worth something like 450, but then you have a massive discount on the actual merger arb. You have SpaceX moving, so if it's 450 with SpaceX at 140, if SpaceX goes to 120, then that's, you lose that in the Tesla share, and then you have the discount. So there's a good chance that you won't make a lot of money on the merger announcement. However, if you are short the stock right now, if you play this stock traditionally, for example, if you're short Tesla because you think Chinese demand will hurt the company, if you're short Tesla because you think that humanoid robot competition is very strong, if any of these reasons are the reason you're short, I think you're covering your short now because you don't want to be exposed to a SpaceX-Tesla combination merger. Who knows where that stock can go? Who knows what the street will do with that stock? And I think it's just too risky, and therefore that's driving the stock also higher. So we're about 20% from the lows, and that's of course very encouraging. So those are the three factors that have driven the stock recently. I think maybe one more macro factor, there was this blow up of a hedge fund, some AI hedge fund. You can Google the story, it's all over the news. And that fund has been ring fenced or basically taken out of the market, and therefore also there's less pressure, front running and all that. How do we feel generally about the Tesla stock? How do we feel about this company? I think we have started to price in the Tesla merger now. So the question now is, how do we feel about a fully integrated, vertically integrated AI company that goes from physical AI to digital AI to energy and, of course, space AI or training at much lower cost and higher scale? How do we feel about that? Of course, we feel very good about that. I think that's a phenomenal investment to be in. The valuation is very high, so that's the risk. So it's a phenomenal company with potentially a difficult stock. But there are some catalysts. I think the catalysts actually come from Tesla mainly, and that is Optimus, that is Cybercab, and then we also have Starship and the AI compute. Those are catalysts that combined could drive the stock much higher. And therefore, I think it's a good situation to be in. Let's talk about Nvidia now. The Nvidia stock, in my opinion, hinges on one big theme, and that is lower cost per token. Lower cost per token, increased speed, so lower time to first token, lower cost per token, lower watt per token. Those are the three big themes that Nvidia is driving with their Vera Rubin platform, which is the next platform, and that is the big driver for the stock for the next 6 months. Vera Rubin is the next platform, and the purpose of Vera Rubin is primarily to solve some of the bottlenecks that have been created with the agentic workflows that have exploded in the first half of this year. High memory prices, high CPU prices, those are the kinds of bottlenecks that Vera Rubin is solving. We've spoken about this before. I don't want to go into details now, but think about it this way. You can solve agentic workflow. Okay, let's step back a second. Agentic workflows are driven by the problem that a lot of iteration has to happen. An agent or many agents iterate simultaneously while solving a task, and then the best model wins or the best solution wins. And that's kind of how coding is happening, how a lot of the agentic workflows are happening. And that requires a lot of back and forth, a lot of memory, a lot of CPU work. Then you have context management. Context is an agent is all about context. So that is, if you want to get work done, if you want to, let's say, write a legal document, if you want to write a piece of code or something like that, You just have to have a lot of context. Means you have to go back to memory, constantly check your state, and make sure you're on the right path. So all of these things are now being solved sort of with an infrastructure that was built for the PC area and the cloud area. So that just wasn't, this was, it was built for human interaction with CPUs and memory. And now with agentic interaction with CPUs and memory, you just have orders of magnitude more usage of this. Therefore, the price per watt, price per token, time to token, all of these things have gone through the roof. Vera Rubin is supposed to solve this. Hopefully, they're on the right path. I mean, not everything Nvidia does is always gold, but in general, Jensen and his people have been on the right path, anticipating the bottlenecks. And Vera Rubin is supposed to solve the agentic workflow bottlenecks. And therefore, we believe that Nvidia has a lot of upside for the second half of the year. So to summarize the state of affairs in our portfolio, we're down 12%. We expect a very strong second half because of the catalysts we just discussed. Of course, there's also the caveat, always the caveat, which is the macro risk. You have, wars and things like that. You have interest rate risk, things along those lines. The macro situation is certainly not the most stable one. We have a midterm election, which will get a left-wing power shift, not fully, but we'll definitely have some more issues on the left here. Just because Trump has sort of let us down and lost a lot of support, and a lot of the enthusiasm after his election has evaporated. Those are the kinds of negative pushbacks I would give. But fundamentally, I think we're incredibly excited about the AI trade. We're excited about the potential for our companies. And of course, the reason we're so excited is because there is a lot of value creation in the cards here. Thank you.